For the sophisticated investor, getting actual exposure to physical precious metals, we're talking gold, silver, even platinum and palladium, it usually presents this massive hurdle.
It really does.
You either have to deal with really high retail markups and some pretty dubious storage solutions, or you get into paper derivatives. And those, of course, are full of counterparty risk.
Right.
The door to the professional wholesale bullion market, the one that, major financial institutions use, that door has pretty much been welded shut for the individual investor.
Well, it's the difference between buying, say, a teaspoon of tea at your local shop and getting access to the massive shipping containers at wholesale cost.
Exactly.
I mean, historically, to get that institutional pricing, you needed huge amounts of capital, specialized custody accounts, a whole regulatory infrastructure.
Right.
But the sources we looked at, they really detail one specific platform, the BullionVault mobile app, that seems to act as this powerful technological wedge. It's designed to pry open that professional market for everyone.
And that is exactly what we are here to unpack for you today. Our mission in this deep dive is to analyze how this platform actually achieves what seemed impossible before.
Offering physical, allocated bullion ownership.
With institution-level security and, crucially, competitive pricing. We're going to break down the key features, really get into the legal structure of that ownership, and walk you through the mechanics of its 24/7 trading.
So you can evaluate for yourself how this gateway really functions in such a specialized commodity market.
And we should mention we are covering the full spectrum here.
Yes, the core precious metals available are gold, silver, platinum, and palladium. And including those two industrial metals is interesting because it allows for a kind of strategic diversification that retail investors often miss when they're just focused on gold.
Okay, let's unpack this.
Right.
When we start talking about professional markets, we're not talking about, small ornamental bars or little coins. The key claim in the source material is that users are dealing with professional-grade bullion. What does that actually mean? What kind of standard are we talking about?
So the standard is something called good delivery bullion bars.
Good delivery.
Yeah, and that's an important piece of jargon. Good delivery refers to the highest quality, largest bars. Typically, these are the ones certified by the LBMA, the London Bullion Market Association.
Okay.
This certification, it ensures absolute purity, global acceptability for settlement. So essentially, you're not getting some kind of novelty metal. You are trading the exact same central bank grade assets that get traded between sovereign nations and the largest banks.
That quality standard really sets the tone. But I think the ownership structure is what defines the integrity of the asset. The sources really emphasize physical allocated ownership. How does that specific structure insulate an investor from all the typical risks you see with, say, paper derivatives or unallocated accounts?
This is, I think, the most crucial insight. Allocated ownership means you receive outright, specific legal title to a uniquely identified quantity of physical metal.
So it's legally separate from the platform's own assets?
Completely separate.
Yeah.
If you own 1 ounce of gold in Zurich, that specific ounce is registered as your legal property, and it's held in trust for you. This is really the cornerstone of asset protection because it just removes that counterparty risk.
So if the holding company, the platform itself, were to face insolvency,
your allocated metal is completely insulated from their liabilities. It's not like an unallocated account or some unbacked ETF where it's all just on a balance sheet. This is your property.
okay, that makes sense.
Yeah.
So the asset is fully secured against the platform itself. Let's talk about the practical side, though. If I own a good delivery bar, I'm not keeping it under my mattress. Where is it? And what are the strategic benefits of the storage options they provide?
All right, so the platform handles all of that, all the logistics, through what they call secure vault storage. The metal is secured, it's professionally insured, and it's held in these high-security vaults. But what's fascinating, and this is a benefit that was previously only for institutional clients, is the choice that you, the individual investor, get. You can actually select the global location where your metal is physically held.
And the choices listed are London, Zurich, New York, Toronto, and Singapore. These aren't just random locations, are they?
Yeah.
What's the strategic advantage for a user to be able to choose the jurisdiction where their asset is held?
This brings us to what's called jurisdictional diversification. By storing your assets in a country other than where you live or do business, you're actively mitigating sovereign risk.
So you can shield your assets from what? potential domestic financial crises.
Exactly. Or capital controls or specific legal risks in your home country just by choosing a stable international repository like Zurich or Singapore. It's an incredibly powerful tool for global portfolio management.
That makes the storage choice a real strategic investment decision, not just a logistical one.
But I mean, all this security, this high-grade global storage, it must come at a cost.
Do the sources say anything about the custodial and insurance fees?
They do, and they're very transparent about it, which is important. Yes, there are storage and insurance fees, as there have to be for real physical security. For gold, the fee is a very low annual percentage of the value. For silver, platinum, and palladium, it's a bit higher, which just reflects the greater bulk and different security needs for those metals.
Okay.
But the key takeaway here is that these bundled annual fees, they replace the often really steep one-time premiums that traditional retail dealers charge to cover their own storage and handling.
Okay, here's where it gets really interesting for me. We've established the quality, the asset, and the security. Now let's talk speed and execution.
Right.
Traditional retail trading is, well, it's slow. Professional markets are fast, but they're opaque. This platform promises instant trading 24/7. How does it even manage to offer round-the-clock liquidity for a physical asset?
It's all managed through an internal live order board that matches buyers and sellers from all over the world. So unlike traditional exchanges that, close down for the night.
Right, they ring the bell.
Exactly. The platform acts as its own decentralized market, and it facilitates these transactions continuously. The real benefit is getting access to that institutional pricing exactly when you need it, giving you liquidity even in moments of market shock, no matter what time zone you're in.
That sounds incredible, but let me pose a critical challenge here. If I'm trading 24/7, how do I avoid massive slippage or just terrible liquidity at, say, 3 a.m. on a Sunday versus primetime London or New York trading hours? Does this 24/7 access actually guarantee competitive pricing during those off hours?
That's a very, very important question. The sources do imply that while the order board is always open, the liquidity really relies on the activity of its global user base.
So you're more likely to find better prices when the big markets are open.
Exactly. You're likely to find the deepest and tightest spreads, which means the most competitive pricing when major global markets like London or Zurich are active. But, and this is the key, by using the live order board, you, the user, have control. You can set a precise limit price you're willing to accept.
So you're not forced to take a bad price.
Right. You're essentially waiting for an offer to meet your bid rather than being forced to execute at a terrible market price during thin trading hours.
That flexibility is key. And in terms of analysis, the app provides deep live price tracking. Instead of just listing off currencies, let's talk about the strategic value of that data. Why is it so important for a user to be able to track prices across multiple currencies and weight units at the same time?
It lets you remove the currency noise and focus purely on the commodity's intrinsic value. Gold, for instance, might be soaring in US dollar terms, but completely flat in Japanese yen. By tracking prices in USD, GBP, UUR, and JPY, an investor can measure their metal's performance against global currency fluctuations and inflation trends all at once. And thinking in both troy ounces and kilograms just caters to whether your frame of reference is the North American or the European and Asian wholesale standard.
And to help take the emotion out of the trade, there's the price alerts feature.
Correct. For any busy professional, setting these personalized notifications just manages that waiting game. You tell the app, notify me when the spot price of silver hits my target value. It's highly efficient.
Are these alerts tied directly to the platform's internal order board pricing, or are they based on the global spot price?
They're generally based on the global spot price using a major benchmark. That then acts as a trigger for you to go engage with the platform's live order board to actually execute the trade near your target. It's like the starting gun. It allows you to quickly capitalize when the market hits your predefined entry or exit point.
Right. And finally, let's hit on cost efficiency. Accessing this level of the market, you'd expect it to be cheaper than retail.
Right.
The commission rate, it says, starts as low as 0.50%. Now, compared to the typical 3% to 5% premiums at retail dealers, that sounds, well, hugely advantageous.
It's designed to be. It has to be highly competitive because the platform is bypassing all those retail layers. The 0.50% starting rate applies to transactions on the live order board, and the sources confirm this rate is tiered. It systematically reduces even further as your trade volume increases.
Ah, so it's a volume discount.
It's the ultimate institutional perk. The more you trade, the lower your transactional cost becomes, which makes it incredibly cost-effective for things like portfolio rebalancing.
Okay, so understanding the competitive pricing and the security, that's one thing. The next question, which is vital for any investor, is how painless is the actual execution? Let's walk through the operational logistics, the mechanics of actually starting a trade.
The initial phase is definitely designed for speed. First, opening a free BullionVault account through the app is quick, but crucially, the funding process involves transferring money, let's say US dollars, pounds, or euros, from your registered bank account to a segregated BullionVault client account.
Segregated. That word again.
And it's not just a bookkeeping measure, it means those client funds are legally held separately, which ensures protection even before you've executed a single trade.
Got it. So once I'm funded, the process is customized. I choose the metal, of course, and then the storage location. Let's say I fund my account and I decide I want to buy platinum in Singapore. I then have two distinct ways to execute the trade, which seems like a key detail for users.
That's right. Path 1 is the live order board. This is true active trading. You place a bid in order to buy at a specific price you choose. That bid is then shown instantly alongside the best available offers from other users who want to sell.
So you're setting your own price and waiting for a match.
Correct. It grants you the maximum control over your execution price.
And the alternative, this daily price service, it seems like it's designed for a completely different type of investor.
It absolutely is. I mean, imagine you're a busy professional, you've analyzed the market, you believe the current price is fair, but you just can't sit there monitoring the order board for tiny fluctuations.
Yeah, that's most people.
The daily price service is a simpler, more hands-off alternative. You just commit to buying or selling at a fixed price that's determined at a set point during the global trading day. It really prioritizes consistency and simplicity over active price hunting. It's a great tool for automated or scheduled monthly investment plans.
Okay, so let's say I place an order on the live order board and it gets matched, whether I'm buying gold in Zurich or palladium in New York. How long before that metal is legally mine?
Settlement is designed to be immediate.
Really?
The moment the order is matched, the transaction is settled instantly. The new bullion is immediately registered in your name as your legal, physical, allocated property in the professional vault location you chose.
And the app then provides the ongoing management tools to reflect that immediate change in ownership.
Precisely. You can monitor your current cash and bullion balances. You can view the up-to-date valuation of all your holdings based on current market prices. And you can review a full, transparent history of every single transaction and fee you've ever incurred.
And then finally, the exit strategy.
Fine.
If I sell my bullion, what's the process for getting those funds back to my bank account?
The sale's just this instant, so the currency lands in your segregated client account immediately. From there, you just initiate the withdrawal back to your registered bank account.
Yeah.
The process is very quick. The funds typically transfer back to your bank within the next working day. The whole system is engineered to provide liquidity, both in and out of the physical asset, as quickly as possible.
So to synthesize the value proposition here, what the BullionVault app really does is it fundamentally democratizes access. It gives individual investors direct access to institutional-level, good delivery bullion. It's all backed by that physical allocated ownership. You get strategic global storage choices in secure vaults, and the costs are highly competitive because you're cutting out all those retail layers.
So what does this all mean? It means the platform successfully provides a secure, flexible, and low-cost way for individuals to invest in and actively manage physical precious metals. It basically removes the two main barriers that have always kept retail investors out: the excessive costs from all the premiums and the huge security and logistical burden of actually taking physical custody of the metal.
And that, I think, leaves us with a truly provocative thought for you to mull over. When a technological platform like this succeeds in removing the capital and logistical barriers to entry in a highly specialized physical market like professional bullion, what impact does that massive increase in global retail participation have on the market's overall price discovery process? And what does it do to the historical illiquidity of these physical assets? Technology isn't just giving you a better price. It might be changing the underlying structure of the market itself.